What an explosive 24 hours, guys. Bitcoin has rallied to 17,200. The weekly RSI have broken upwards from that downtrending resistance, and the macro environment is starting to shift. In today's video, we're going to talk about the macro reversal, discuss the points of which Bitcoin does need to reclaim, the technical indicators we do need to see turn positive, and of course, the short-term price action in regards to the current trend and potential bull trap that we are in at the moment. Let's go ahead and jump into today's video. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day. We're going to go ahead and take a look at Bitcoin today, discussing the price action, particularly the RSI breakout on the weekly chart, which is absolutely huge. We're also going to take a look at the short-term price action, talk about what's happening over here, our macro reversal points, so the key points to look out for a macro reversal, and of course, the current channel which we're in, which of course is a bearish channel. Before we get into today's video, smash that like button to comment and subscribe to the channel. If you are interested in joining our Telegram channel, you can actually go ahead and click the second link down below. You'll get updates on all of our charts, analysis, videos, information, and a whole lot more. And of course, get access to our VIP channel if you are interested. We do daily trading signals, exclusive altcoin analyses, a whole bunch of extra content in there, and of course, our group chat with all of our VIP members who are trading on the daily. Let's go ahead and dive in, starting with the usual, the market data. So, what are we looking like so far? 3.78% in the green for January. Awesome to see some green price action. Really nice to see for Bitcoin. So far, so good. Moving on. Volatility is still quite low. We have moved up from 1.32 to 1.34. Of course, liquidations have increased by 1,600%, guys. So we're starting to see a lot of volume move into the market. And as you can see over here again, the volume in the last 24 hours is up 152% at 51 billion. Again, movement is coming back to the market. Momentum's coming back to the market. FOMO's coming back in. People are starting to trade more. The question is, how long will this sustain? Is it a sucker's rally leading up to, of course, CPI, which we'll talk about maybe tomorrow or the day after, or is this actually going to be resulting in a macro reversal? So, before we get into that, of course, let's go ahead and take a look at the rest of the market. So the DXY is continuously falling. Again, our targets for the DXY, if we do continue downwards, is 101, so 101 again. That is our next support level. Until we break through these upper resistance levels, we are very much on the track for that next move downwards. And of course, that will be very bearish for the DXY, but obviously very bullish for cryptocurrency and the traditional markets. Looking at the Dow Jones and S&P 500, similar patterns over here. Rising channels developing on the smaller time frame. We can expect a potential rejection and breakdown from these. Of course, we are still in a downtrend ever since our bearish divergence. For us to see any sort of continuation upwards, this dotted line will need to be broken. We also will need a break over 35,000 to see a swing up to that red line. Moving on to the S&P 500, exactly the same thing, looking for a break over our solid red line, a break out of our downward diagonal resistance, and a clear of the local high to see a swing upwards and some bullish momentum. That's enough. Let's go ahead and jump into Bitcoin. So we'll start on a small time frame. What we are seeing here, guys, is a rising channel. Now, a rising channel is generally a bearish pattern. This is an upward consolidation, so uptrend, which generally results in a break towards the downside as a trend exhausts as we start moving upwards. We are seeing a current retest of this uptrending resistance currently. At the same time, we are retesting this horizontal resistance range between 17,150 and 17,200, where the price is just currently sitting very much underneath the $17,000. It's like literally right under. It's like $5 under 17,200 right now, indicating again 17,200 could be acting as a temporary support, should I say, a resistance which we could get rejected from. So definitely keeping an eye on this structure as I break down over here, particularly closing a 4-hour candle back below the previous candle, so closing below 17,125 will actually result in a continuation back towards the downside, expecting a retest of this uptrend, which we could potentially break and actually start continuing down. Towards the downside, guys, again, we are targeting these red boxes, so looking at 16,500, looking at 16,200, looking at 15,800. But we've talked about that enough already. Let's talk about the bullish stuff that's going on the charts right now, but let's first define a macro structure. So currently we are within a falling wedge structure. Again, this hasn't been a confirmed or validated structure yet because we haven't had the necessary amounts of retests to validate the structure. We have only had 4 points of retest, which isn't enough. We do need 5 points to validate the structure. The 5th point of retest could occur over here at the moment of a breakout, and therefore will not get a confirmation until it breaks out. But at the same time, guys, we don't really need a confirmation until it breaks out, because we're not going to be looking for a macro reversal until this structure, or whatever this downward trending resistance does actually develop into, whether it develops into a falling wedge, or whether it even develops into something such as a descending channel. The key point is that the downward sloping resistance, the above resistance, the one that isn't malleable to change, is the key level that we do need to break out of anyway. So we are looking for a break out of that downward sloping resistance before I move towards the upside. On the 2-day chart, we are hoping to see a break of the 50 EMA. The 50 EMA is slightly underneath that resistance level, and again, it's sitting around the $18,000 level. Breaking through a 50 EMA will give Bitcoin the trend strength, the momentum to push upwards and hopefully break through that downward sloping resistance. We also do have the RSI on the weekly, and this is the key thing I want to talk about today. The RSI on the weekly chart has actually officially broken toward the upside. We'll go ahead and use this chart, the blue chart. It's a little bit easier to see. What you can see over here, if we go ahead and draw our diagonal line across these points here, we can actually see a breakout has occurred, a confirmed breakout on the weekly chart over here for RSI. Again, what does this mean? It doesn't mean we're reversing. What it does mean, it tells us is an increased probability that Bitcoin will be continuing up here, up and strong enough to retest our key levels, which are the 50 EMA on the 2-day chart, represented by that red line we just showed you. Key level number 2, the diagonal resistance of the falling wedge, okay, represented by the structural analysis we're showing on the chart. Key level number 3, the POC level on the VRPV, if we go ahead and zoom out, which sits at around about 19,200. Actually, it looks like it's been adjusted. It looks like it's moved downwards here. Oh no, there it is, to 19,200, which you can see on the chart over here. Those are our key 3 levels. So what we need to see is a breakout of the 50 EMA, the downward sloping resistance, and the POC on the larger time frame, which you can see by 19,200, to get a confirmation of a macro reversal. What the RSI tells us is that the probability that those 3 things occur, which will inevitably result in a reversal, has increased, and that is why the RSI is so significant. I'm going to go ahead and leave the video there, guys. That's a quick update for me today. I really don't have a lot of time. I hope you enjoyed it. If you've got any questions, leave them down below. Of course, this is something that we shouldn't be ignoring. I've been saying for the last couple of weeks, actually I've been saying for a while now, we are in a downward consolidation. Yes, this is a downtrend. Absolutely correct. But volatility, volume, has been dropping, guys. During this whole period, we've seen bullish, should I say bearish momentum fall. We can show you on the MACD. The bearish momentum has been falling, okay, during this whole period. We can see that, such on the 14-day chart, is a very, very clear sign. You can see bearish momentum is falling as we go from deep red to light red, signifying that compared to the previous period, there is less bearish momentum as opposed to what there is now. So we're seeing decreasing bearish momentum, and that has been going on ever since the 18th of June, okay? We're seeing decreased volume. Again, the market hasn't been moving as much. We're coming to the end of compression. We're seeing decreased volatility. All those things occurring within a falling wedge structure signifies bullish consolidation, which will eventually break to the upside. My statement a few weeks ago was, I do believe we'll break to the upside. The question isn't, are we going to break from this falling wedge? The question is, when are we going to do so? Would we see a swing low one more time to retest this low, potentially 13,900, 12,000, and then push back up and break that resistance? Or are we going to break up sooner than later? And of course, with the weekly RSI, it will potentially suggest sooner than later. So with that being said, guys, I'll see you tomorrow. Have a great day. Cheers. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to BitGet with the link down below and join myself and all of our other VIP members and other members who trade on BitGet daily. There's a whole range of benefits and features you can actually get by trading on BitGet. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the Mega Whale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video.